All right. So I am back again for the third time today. I'm pretty sure it's the third time. But now we are actually going to get into journaling. The first time today I did a live stream, I was looking at Apex's rules, and I will look at more of those in a second. Now that I am thinking about it, I'm going to write that down as a video idea to go over all of Apex's rules. I have these few video ideas over on my other screen right now. Explain how Apex rules work. Okay. And so the second time I hopped on the stream, I was taking a look at what was I looking at on the second time? Second time I hopped on the stream. So the first time I looked at Apex's rules, then I got back on for 20 minutes, and I was like about to start looking at the charts, but I was doing something else. And now finally, we're gonna go look at the charts. We're gonna talk about what happened on Friday, and man, Friday is a good day to review because it was an excellent TGIF setup. It's exactly what I said was gonna happen, and it's an amazing opportunity to learn from. There was a trade that I took. Oh, that's what I did. I journaled the trade that I took. So yeah, I'm gonna recap the weekly profile. I didn't end up doing that earlier this week, so I'll recap the weekly profile. Maybe do some high time frame analysis a little bit as well. But yeah, let's hop right into it. So checking out the chart here, you can see we did end up getting our bullish expansion week. So what I mean by that is we expand Monday through Thursday, and then Friday retraces. We have Monday pushes into a key level, right? So this was like the most stereotypical bullish expansion week that I've maybe ever seen. So we get that push into the key level. And let's actually do weekly profiling real quick, and then we will go right into whatever it's called, our analysis of price action for Friday. So let's talk about the weekly profile first. So okay. What was the start of this week? January 18th through 25th. Okay. So you see this key level, this daily order block, this was the low of the week. Remember, we had this previous week's high. That was a draw on liquidity. The market was going to want to come here because we were reacting off of a monthly fair value gap. So we were within this higher time frame model where the monthly fair value gap was getting respected. And with that in mind, we had draws on liquidity above. I mean, it wasn't very complicated, but it was critical to understand the weekly profile. We simply had a monthly gap, and then look at how the weekly candle respected the monthly gap. With that in mind, see how this weekly candle was respecting this monthly gap? Well, we were expecting this week to possibly be a bullish expansion week. So you can see that. I talked about that in my journal actually at the very beginning of the week. I said, this was last week, and then I said, right now I see this being another expansion week. Since last week weekly candle respected the FVG with good momentum. So now I did end up jumping the gun, and we ended up going lower, hitting the daily order block. I thought this might have been the low of the week, and I did jump the gun there, but essentially everything I said was correct. So yeah, back to the chart. So we were respecting this monthly fair value gap, and oh, you can't see. Okay, hopping down in time frame, we were respecting this monthly fair value gap. We had swept out previous month's low into the fair value gap, so we were definitely leaning bullish, and at least that's what I was leaning, because the weekly candle had respected the monthly fair value gap. So we'll talk about that. I'll show that real quick. Monthly, what's it called? Previous month's low. Okay, let's start out with before and after. So this was before. So going into this week, we had where's the other thing? And so let's talk about what happened. So this ended up becoming a bullish expansion week, right? Where we had the low of the week occurring at this daily order block. This was exactly what we said would possibly happen. So we get the low of the week at this bullish order block. Right to the, so if I pull up this stat map, this is actually pretty helpful. We're gonna mark out these levels here. I'm gonna mark it out with a vertical line, just to delineate kind of what this week looked like. So here's the weekly open. So you can see the week opened up, we get down and push into this daily order block. This was right at the weekly statistical manipulation level. So let's get rid of this now. Boom. That's actually insane if you really think about it. We push into the daily order block right at the weekly manipulation level, right? We were expecting it, this going into this week, we were expecting this to happen. And so we then get expansion throughout the rest of the week. So let's also put up the weekly candle, right? And let's turn off the open, high, low, close price. And so, yeah, you could see how this worked out, right? Where we had essentially we had yeah, man, this is crazy. Like right into the daily order block, right into the weekly stat map manipulation level, and then we expand the rest of the week. And oh, we should probably mark out that weekly objective. I mean, you could argue the weekly objective could have been a few different things. The main one, in my opinion, was this previous week's high. So I would just argue that it was previous week's high, personally. And actually, let's just leave it at this. So boom. There's that weekly weekly expansion week, and then looking at the daily chart, you can see here's how I drew out this key level. We simply had this as the daily order block. And that is as simple as it gets. This was the most obvious key level that would possibly be below the week, and that's what ended up happening. Here you can see the full weekly profile in detail. This was one of the most textbook was that on Tuesday? So, man, okay. What can we learn from this week, right? Because we knew going into the week that this was probably going to be a bullish expansion week. We knew this. I think once you get, shoot, I'm gonna pull up the stuff I had on the chart. Okay. Once you get this confirmation that this is a possible buy model, right? I mean, it gets tricky because this manipulation leg, you can't really measure out standard deviations of it super easy. But, yeah, it is obviously like a bullish expansion week. Now, if you do measure out standard deviations of this, you can see that we only hit the -1. So, with that in mind, I am anticipating us probably to go to the 2 to 2.5, but then again, we got that S&T, so we'll just have to see. Actually, I'm not entirely sure because we do have two giant S&Ts with a lot of RTH gaps below. But this honestly looks a little bit like inducement, right? Where you have a sweep of a low here. And I wonder if this occurred at a key level. Yeah, basically like a daily per value gap, right? So should be interesting. We'll see. This could end up being inducement, and if it is, 2 to 2.5 lines up with this liquidity pretty well. So I mean, you measure out this manipulation move as well. This is pretty obvious. You get a similar situation with this 2 to 2.5 lining up above this high. So it's possible that maybe we need to come into this new day opening gap with this old high here. That would make a lot of sense. So maybe open, low, high, or yeah. Anyway, I'm just kind of speculating at this point, but yeah. Let's go back into the charts and look a little bit more here. Yeah, this is kind of the key level I'm leaning towards. The market seems to want to go here. This 4-hour order block. Or I guess you could call it I don't know. Depends what you want to call it, but yeah. Anyway. Okay. I think we covered weekly profile, but now it has me a little interested in this idea of like possibly we need to continue up higher. I know we have those RTH gaps above, but I mean, this seems like it might be low resistance. The market might want to come here. It's aligned well with the 2 to 2.5 standard deviation. What else should we keep going in detail on the weekly profile? I mean, it's tough. Like, I feel like we covered most everything with the weekly profile right now. I don't know. Did we cover everything in the weekly profile? Honestly, I think so. Kind of think this is turtle soup. I'm gonna make a new thing for turtle soup. Oh, I know. Actually, I don't know though. Would you consider that turtle soup? Because we still could come to this 4-hour order block, honestly. I mean, measuring this out. I mean, we would expect next week to have some form of whatever it's called. Yeah, I honestly see us coming down into this. I'm not gonna get ahead of myself. Yeah. Okay, should we look at yesterday? I think we covered enough about the weekly profile. That's basically all we need to cover. I mean, I would measure out standard deviations, but we only went to the -1. Still, though, I guess it's worth measuring out. It's pretty crazy. You can see what I wrote here. Measuring on standard deviations, you can see we went right to the -1. Alright. Let's talk about the day yesterday. So, hey, Hanimi, what's up, bro? Look at this analysis on the weekly profile that I've been doing. I didn't really recap this week's weekly profile yet, so I'm doing it right now, and then I'm going to review yesterday's price action. But, bro, I'm having a great awakening right now. I'm realizing, like I have so much, I need to put so much work in on my psychology, and I need to do it now, like now, bro. And you're like, I don't know, you're kind of like an angel to me in my life, bro. Like, it's just like you always just pop up in my life whenever I need you most. It's so crazy. It's like, and you're always so wise, and like, it's just, I don't know. I'm very grateful for you. And so anyway, psychology, I'm going to be working my butt off on my psychology. Like, if I can't, if like, I was thinking about it, I'm going to make a video on this, but if I don't have psychology as a trader, so you could be a great trader and be mediocre at psychology and you'll never make it, but you could be mediocre at psychology. No, you could be great at, you could be okay at have amazing psychology. I'll do that. Okay, what I was saying is, let me restart. You can be a mediocre trader and have amazing psychology and be an incredibly successful trader. But you can also be a great trader but be mediocre at psychology, and you'll never make it. Because if you go on one tilt, just one, if you go on one tilt, let's say you've been working on your trading for a year, 6 months, 2 years, one tilt is all it takes to lose everything that you've worked towards. And so, like, I mean, that kind of just gives you chills. It's like, if you don't have psychology, you have nothing. And it's just, I have so much work to do. I know I've been saying that for a long time, but, like, I mean it more than ever right now, and, like, I'm gonna do it. I'm gonna fix my psychology. I'm gonna start, like, every minute I spend watching a video on trading, I'm gonna watch a minute of literally just YouTube videos on discipline. Like, I genuinely, like, I have an issue, and I understand that. I need to fix it. There's literally no way for me to be a successful trader if I don't fix it. So, and I think one of the things, I think it was you or someone else told me, might have been Jan, but you were like, someone was like, bro, just literally stop doing the singular account trades, only do one copy trade a day. And I'm realizing, like, yeah, and then also, something I think that's going to help me is, I used to force myself to sit on the charts and just be like, trying to get chart time in, even after a loss or a win. And I'm realizing now, like, initially I was just like, oh, more chart time better. But in this specific case where I'm trying to focus on my psychology and not over trading, when I take that one trade, win or lose, I need to get off the charts. I need to get out of there, because the second I take that trade, win or lose, I'm going to start over trading if I stay on the charts. And then I can journal it later in detail, like afterwards, after the market's closed or whatever. That's fine. Review every little detail. But in the moment, if I sit there and watch price action after I took a trade, especially if it's a loss, I'm going to overtrade. And so I need to I'm just going to shut everything down after I take that one trade. I'm like, because otherwise it's so tempting. It's so tempting to just sit there and be like, oh my gosh, like I gotta, like this one's better than the last one. I gotta take this one. Yeah, I'll show you this week's trades if you want me to. Yeah. Um. Well, I didn't have like. I'm trying to think of what. Like, I did take a couple trades, but I'm trying to think. Yeah, let me go back in the charts and look at the trades. So, yeah, that's a good idea. I'm hesitant because I did lose a lot, but that's how we get better, right? So let's do it. Let's do it. I should have everything marked out in here in my journal. Let's see where it says trade 86. I'm looking for trade 86. Okay, what? How did I go from trade 80 to 86? I'll just go back in price action. I'll be able to find it. I'll start with the one I took yesterday. So yesterday, I saw we had really, really good generated liquidity here. So yeah, we'll just start out on yesterday. I'll figure out the other ones later. So this was yesterday, and I took this loss. We had really good generated liquidity. We had we kind of hit our -1 standard deviation and also our weekly distribution level, and so we got SMT with this high. And then on the low time frame, we had SMT here. And I really like this generated liquidity. So I tried going short at when this 5-minute closed below, but in hindsight, actually, I understand there was a 30-minute and a 15-minute external gap, and probably should have waited for that to get broken. And you can see how the 30-minute, it gets this giant respecting candle in here. And so, because the market respects this on the 30-minute, like it looks like you might count this as inverting, but I would count this as like a respecting candle, honestly, because the way it wicks back up. The 30-minute respects it. Once the 30-minute respected this for VI gap, I should have got out. Oh, let me add you to the journal list. Alright. You should be in there. Hanimi's journal. There you go. You sent a journal pic in Discord. Check it out. Okay. Dude, you're doing so good, bro. Way to go. That's so good. Way impressive. So impressive, man. I look up to you so much, man. That's awesome. Okay, so I'll show you the trades I took this week. Okay, I'll be just totally open and transparent. I know this one, some of them are stupid, but whatever. I took this 5 minute inversion. I know it's a small fair value gap, so it's not like amazing, but we had such good generated liquidity that I thought this was gonna work. I really did. And it could have, but I think, and I know I was anticipating the 15 minute and the 30 minute to inverse, but I felt with S&T, and we were also delivering from a fair value gap. We were delivering from a 15 minute BPR here. We're delivering from this BPR. We're delivering from BPR. We inverse this fair value gap. We were going into the macro. I felt like I just wanted to get ahead of things and just take the 5 minute inversing instead of waiting for the 15 and 30, because I just thought we were just gonna go right down. And in hindsight, I'm trying to figure out like was that dumb or not? Part of me thinks it was okay. Part of me thinks, because like I've seen it happen where like the low time frame inverses, and then we go run the liquidity, and by the like if you would have waited for that 30 minute to inverse, that 30 minute already runs all the liquidity. But on the other hand, by taking this 5 minute inversion, I'm taking on a lot more risk because the 15 minute and the 30 minute haven't inversed yet. So what I probably should have done with this in mind is, if I'm gonna take this 5 minute inversion, I should have like played it really conservative and probably just gone break even here, because I don't know if that 15 and 30 minute are gonna inverse. Since I don't know, I should have probably gone break even here and gone super conservative, because otherwise, I'm trying to predict the 15 minute inversion. The 15 minute did inverse really nicely, but then for sure, once I see this 30 minute candle respect the fair value gap in the future, when I see this 30 minute candle respect the fair value gap, I'm getting out. I'm getting out because this 30 minute candle respect is to me, this is not an inversion. To me, the way this comes back up, it's respecting it. That's just what I see. But I'm curious what your thoughts are on this trade. I think I used to think it was a good trade. Now that I'm looking at it again, I think it was an okay trade. But after I see this 30 minute candle closure, I get out right at that closure, because that's not good. I don't think that's a good closure. So I'd probably get out at that 30 minute candle closure. But I'm curious what your thoughts are. As well, since I was anticipating it to inverse, I probably should have just gone break even here. So it probably shouldn't have been a loss, but or I might have taken the three. It might have been the 3 minute. I might have tried to take the 3 minute. I can't remember. Anyway, in general, I think it wasn't maybe light bulb enough, maybe you could say. Like, sure, it just didn't have, like, I guess the 15 minute is kind of light bulb. The 15 minute, you get this clear candle body closure. The 15 minute's a little bit more light bulb than the 5 minute. But I think you want it to be a little bit more light bulb than this. I don't know. It's decent. I think, honestly, I think it was okay. I think it was okay, but yeah, it's hard to be perfect. I think it was okay. I think it's a good lesson, though, because could it have been better? Yeah, because this fair value gap's super tiny. The 30 minute hadn't inversed yet. So in the future, if I have a trade where I'm trying to take this 5 minute inverse, but the 30 minute hasn't inversed yet, I'm going to be a little bit more cautious. That's the biggest lesson. Also, another big lesson is this is not the signature and price of a sweep. Like, if I want to see a sweep of a high, it should probably have mostly been a wick. The fact that this had this giant candle body closure actually inversing this fair value gap here, that's a big red flag. I mean, actually, now that I think about it, this is a 30-minute inverse fair value gap. So the 30-minute inverse to the upside, and I'm taking a 5-minute inversion to the downside. So there were a few things that weren't so good about it, and it could have been better. I think if I were to do this again, to see this trade again, I would either I would either just say it's not good enough. It's not, like, it's good, but it's not good enough for me to actually take it. Like, I'm just gonna be precautious. Or B, I think I would have gone break even at that low, or C, I would have at the very least for sure gotten out on this 30-minute respecting candle. So either one of those three scenarios would have unfolded if I were to take this trade again, and it wouldn't have been a loss. So that's my big lesson on that trade. But I guess let's go look at other trades that I took this week. So we did end up going and run that LRLR, and I knew we would. You can see how well this breaker block held. And this breaker block has amazing signature to it. So we get this high, low, higher high, pop above these equal highs here. I mean, this is just amazing signature. If I were to take a trade again and redo it today, I would consider taking this trade, but maybe just wait for like a lower time frame confirmation off of it, and then I just take this, because this is a nice breaker block and a nice fair value gap, and we have all this liquidity below. And I mean, this, if I were to take this trade redo today, I would have probably waited. I guess this happened way later on in the afternoon, so maybe I wouldn't have taken it. But you have this break block, you have this fair value gap. I think this was probably the trade of the day, and then I'd probably just take a low time frame. I don't know. Like on this, once this candle closes, I'd probably enter or something. But yeah, that breaker has really good signature to it. So anyway, all right, I'll see you, Hinimi. Good talking to you. All right, back to looking at the weekly profile. We went right to that weekly manipulation level, right to that daily order block. What else is there to talk about with the weekly profile? I think that mostly covers it. I mean, we knew this was probably going to be bullish expansion week, and it ended up becoming one. So yeah, we got the weekly distribution level. We still got the monthly distribution level above us as well. I think we are delivering to that monthly distribution level. I think order flow is bullish right now. And we're probably delivering to this LRLR here. But what else was I gonna look at with the weekly profile? I feel like I covered most of it. Oh, maybe that there was a TGIF setup. I don't know. I think we're good on weekly profile. I think I'm obsessing over. We already covered everything with weekly profile. Let's move on to yesterday specifically. So yesterday we get this beautiful, beautiful daily CRT. And actually, now that I mention it, I'm gonna pull it up on my other screen, and we're gonna look at it on my other screen. So we get this beautiful, beautiful daily CRT yesterday. I mean, I called this out like as it was happening in live time. I said we got the CRT high, and I'm not gonna journal this like in my journal because my journal is just these videos. Like my videos of me talking about what happened are gonna be my journals, and my journaling is gonna be for my specific trades that I take. Just because it takes a lot of time for me to type that up, and by going through the motions of talking about what happened in these videos, it's journaling. It really is. But for specific trades, I will write those down because I think that's incredibly beneficial to do. But yeah. Anyway, really really nice daily CRT. It was a daily CRT in 2 candles. We had the CRT high here, and we had the CRT low here. And so this one will be nice to pull up high time frame candles on this. I mean, this was also a 12-hour CRT if I remember correctly. Yeah, this is a 12-hour CRT as well. It's more clearly a 12-hour CRT, so I'm gonna have this be 12-hour CRT instead. And another reason that it was a really good 12-hour CRT is because if you look at the S&P, same thing on the 12-hour, what happened? 1, we have S&T with this high, but then 2, we have S&T with this high. Go look at that. S&T, and then S&T. So 2 different S&Ts. So it was a nice confluence that this was probably going to go, this CRT was going to work. I mean, with that in mind, you really can't make a case for a move lower in the short term, but man, I don't know, because I kind of feel like we're also, yeah, it's something I'm going to have to analyze throughout time. I mean, we got S&T there, we got S&T here. It's hard. I could see both scenarios unfolding right now, so I'm not gonna necessarily do anything. But yeah, I'm gonna pull up the 12-hour candle. You can see there's our 12-hour CRT high, CRT low, and if I pull up high time frame candles and turn this to 12-hour, what? It won't let me do 12-hour. That's so stupid. Okay, fine. Anyway, we get SMT with this high, and then we might even get another SMT. I could be wrong. Okay, so we get SMT, SMT, and then on the lower time frame, we have the CRT here. So I kind of thought we were going to go lower here, but we ended up wanting to sweep this high again, and you'll note that we ended up already having swept previous day's high. Where is it? CRT high was also previous day's high. And then yeah, we ended up coming down to previous day's low as well. So I guess hop down the time frame here. It's tough because I wasn't sure if this was going to go lower right here, and clearly we ended up needing to go sweep out this high, and you'll note this was Asia's high. So in the future, I gotta be a little bit more careful. Like, we had Asia's high above that wanted to get swept out first before we ended up getting a reversal. So yeah, just I'm gonna be a little bit more careful about that in the future. If we ever have Asia's highs above and like I think we're gonna reverse, maybe just wait. And so anyway, lower time frame here, we ended up sweeping the CRT high, sweeping Asia's high, and then we get S&T, we get a breaker for a value gap right here. This trade was beautiful. Breaker and for value gap. And you know what makes this trade so good is this breaker block and for value gap are within the wick of the 12-hour candle. So this breaker for value gap are within the wick. This breaker has really good signature to it. And so you can clearly see this is pretty good AMD as well, where you have accumulation and then manipulation. Before we get distribution. You can measure standard deviations of this. Yeah. Now, unfortunately, we don't go to the 4 to 4.5, but I mean, I bet you if we measured out from the 5 minute, you can see we go to 2 to 2.5. So yeah, if you measure it out like that, a lot of different ways you can measure it out, but yeah, we end up going to the 2 to 2.5 here. So, whoops. So I think in the future, you gotta be more careful. Even if you think you're gonna go lower, like here, I thought we were gonna go lower. In the future, I need to be more careful and like wait for some kind of actual double purge, because you can see we don't end up going lower until not only have we purged this high, we had to purge this high twice. So I was not only too early, I was too early by like 2 different moves, right? So we had to sweep this high, and then we had to sweep this high again. So you really got to be patient when it comes to getting an entry. You can see we also don't get this breaker for value gap until we even get a 15-minute change of state of delivery, right? All throughout here, no 15-minute, well, I guess we get one right here. We get the 15-minute change of state of delivery, right? Actually, we do nah, I wouldn't consider this. I wouldn't consider this change to delivery because it's still this down close candle's on the same side of the curve. This is clearly on the opposite side of the curve, right? So we also retest this 15-minute CISD. I mean, yeah, the rest was history. That breaker block for value gap and this 15-minute CISD. Trading is so behavioral based. Oh yeah. Trading, like, it's one of the hardest things in the world, if not the hardest. And it's because we're all human. We're all emotional. It's like, and it's so much easier in hindsight, because like I could go on the chart and call this out all I want, but to be able to sit in the chart and wait for all this to occur, it's a whole different story. And I think man, like the more I'm realizing it, like it is so psychological. Like if I don't have my psychology in check, it doesn't matter how good of a trader I am. I like one tilt is all it takes for me to lose everything. And so if I don't have psychology in check, I will never make it. And so I'm really coming to that. I mean, I've been trying to work on it for a while, but I'm really really trying to work on it now. And so anyway, yeah, I was just talking about how essentially we had. Let me move out of the chart a little bit. Check this out. So I called this out before it happened. I said we had SMT with this high, we had SMT with this high, and also with this high. So we have two different SMTs, and then along with that, we get this really, really nice 12-hour CRT. I don't know if you know what CRT is, but it's basically when you have a higher time frame candle sweep of one side of that candle, typically you'll go to at least the midpoint or the opposite side of that candle. So here you can see this on the 12-hour. We had a 12-hour sweep of one side of the candle, and then the candle closes back within the range. So with a high probability, you can expect this third candle right here, this third 12-hour candle, to go to the midpoint or the opposite side. So essentially that gave me bias for what I was expecting for the day. And so I was looking through here to go run all this liquidity. Now, what's the issue with going short here and instead of here, right? Because initially you think, oh, we got this inversion, we should go run this right away. So that was my initial thought. We got this inversion and we should go run this right away. Why didn't we run this right away? Do you know? Whoops. We have such good generated liquidity. I mean, we already swept out the CRT high. What else do we need, right? Seems like we should be good. We sweep out the CRT high, we get this inversion. You would think we should be good. There's a couple things. One of them is we still had equal highs above. And these equal highs were also a session high. So these equal highs above were also a session high, which was Asia. The fact that we had this above instantly makes this inversion lower probability. It's not worth taking if we have a session high above that's equal highs. Like, sure, this could have worked, but is smart money gonna take it with equal highs in Asia above? No, they don't care. They're not gonna sponsor the move lower until they know for sure that they're not gonna get killed up here. So it needs to come back and sweep out Asia, and you'll know as well. Another reason this failed is the market gave us this subtle hint. It said on the 5-minute, it said, or no, the 30-minute, it said we got a 30-minute inversion back to the upside. So not only that, but this 30-minute candle respects this fair value gap. It doesn't inverse this. This 30-minute candle respects it. So all the little minor details tell you everything. The 30-minute inverses back up. This 30-minute candle respects it. The market wanted to go to Asia's highs first. And then only once we get a you want it to be clear, but once we get a clear change of state of delivery, and I wouldn't consider this change of state of delivery. It's not obvious, right? This is not obvious change of state of delivery. This right here is a change of state of delivery where we get this candle body close. This is obvious, right? This 15-minute candle body close is the obvious change of state of delivery, especially because we had swept out that final liquidity pool that we really need to get taken out. That was Asia's highs. We really, really wanted to get Asia's highs taken out first because they were also equal highs. So now we know that this is still probably going to be a 12-hour CRT. Pulling this back up, we know this is probably going to be a 12-hour CRT. We got this 15-minute CSD now. So now, not only do we think this is probably going to be a 12-hour CRT towards this range of lows below, but also you have a really good breaker with a really good signature and price, where you have a high, a low. Oh, it's called ICT Kill Zones and Pivots TFO, and it's nice because not only does it have all the sessions, but also it has, you can turn on previous days high and low, previous weeks high and low, previous months high and low, and you can do time levels as well. And so it's like 3 different indicators in one, which I love. I love that it's all in one indicator. I don't have to go and get a whole bunch of different ones. So that's why I have like 4 different versions of this, because I have one for session highs and lows, one for previous days, previous weeks, previous months highs and lows. You've been trying to find it. Is it not showing up for you? Because I heard that it wasn't showing up, like, for some people. I don't know if that's true or not, but. And so, yeah, it also has time levels. So I use like 9:30, 8:30, and midnight. You can use them basically like, these time levels are basically like, if you're above it, you're in premium. If you're below it, in discount. And then actually the levels themselves are like key levels. So you'll often see these levels be like holding as key levels. See how midnight perfectly gets respected here. And so midnight gets perfectly respected again. So it's like, not only will these levels be premium and discount, but they're also useful for key levels as well. So, back to what I was talking about. Dude, sick. You should join this Discord that I've been working on making. It's basically just for all of us. We're all working on getting better at trading together, right? We're all on this journey together, so it's where we can like talk about trades and stuff, and I'm just trying to make it better. So if you have any ideas, let me know. But I'm trying to just make a free community for everyone, and we can all get better together. So yeah, back to what I was saying. So I knew we wanted to go run this. I mean, look at how obviously this is generated. This is like stupid how obvious this is generated. Look at how those lows are perfectly lined up. And we end up running it. But I knew we still wanted to go run this, because this was an obvious accumulation range. Anytime you see an obvious accumulation range like this, the market's going to want to come back for it at some point. So I knew we were going to want to come back for this as well, and I knew we had that 12-hour CRT. So what I'm looking for within here is, well, I should have been looking for, first we had to sweep Asia. That was the key that I missed. So I shouldn't have taken this because we have equal highs with Asia above. Sick, dude. So it's just lower probability. Like, the fact that we have equal highs in Asia above, don't take it. Thanks, bro. I appreciate it. So then we come up, sweep Asia, get this breaker block with really good signature. We get a high, a low, a higher high, which wicks out Asia's highs, and then we get a close back below. That validates this as a breaker block right here. So this is a breaker. And then as well, this is a fair value gap. So this breaker fair value gap is in premium of this 12-hour candle's wick. Or, I mean, it's within the 12-hour candle's wick. And you know this is a 12-hour CRT. So you could possibly enter right at this breaker fair value gap, knowing it's a 12-hour CRT, and then target that low resistance liquidity for a 3-to-1. That'd be a 3-to-1. Now, I like to wait for lower time frame confirmation. So what I would have done is I probably would have waited for like a 1-minute CISD off of this, like something like this. And once we get this 1-minute CISD off of the breaker, then you can enter here, stop loss above the breaker, and this even gives you better RR. So you could have got a 4-to-1 with all that in mind. But unfortunately, it's a lot easier to say in hindsight than it is to actually trade it. But clearly that's what happened. One day I hope to catch trades like this. I mean, one day I really do think it's possible. I just got to keep working at it, and there was no reason to take this trade with equal highs in Asia above. I mean, instantaneous lower probability trade. I don't care if there's a 12-hour CRT. If there's equal highs in Asia above, what are you doing? Like that's just gonna make it lower probability instantaneously. But then after we sweep out this high, it's like, okay, light bulbs are going off now. We get this breaker, we get this fair value gap. We get a low time frame change of state delivery off of it. Okay, I think the market's ready. And then boom, we go run this accumulation range down here. So, very valuable day to learn from today. I mean, we just had a ton of liquidity below the market. Even, yeah. Man, very valuable day to learn from. But you can see CRT is really powerful, but it can be easy to jump the gun if you don't have that 15-minute 15-minute CISD as confirmation. Like I didn't hear. I don't care what you say. This is not a 15-minute CSD. Like I do not consider this 15-minute CISD. I want to see this. I want to see this after sweeping Asia. Then that is like that's light bulb. That's a light bulb CISD. This is I don't know what the heck this is, but this is not a light bulb CISD. This 15-minute close below, that's a light bulb CISD. So then, after we get that, then we come retest that CISD and deliver to our final target, which was the accumulation range below. So, yeah, just got to keep getting better. I really do like the CRT higher time frame candle stuff because it gives you really clear bias and perspective. If you have a 12-hour CRT or a daily CRT, you know you're supposed to enter within the wick of that CRT candle. I mean, it's not like anything complicated. You know specifically the high probability entry will be within that wick of that CRT candle. So find a lower time frame entry there, right? And you can even refine that lower time frame entry like I did and say I could enter right at that breaker for value gap, or I could even wait for a 1-minute CSD off of it and stop loss could go above the breaker for even better RR. So you could even just have your stop loss at the breaker initially, but I think it's worth having the 1-minute CSD off of something, give you confirmation. But yeah, I think every day I just get a little better. And the biggest reason that this 5-minute inversion failed is like, it's not a light bulb inversion. 2, we had equal highs in Asia above. I mean, those are the two main reasons. It's not light bulb inversion. Equal highs in Asia above. It's just going to be hard. It's just... And there was no 15-minute change of state delivery. So, even though we had that 5-minute change of state delivery, there was no 15-minute one. It wasn't good enough. Mediocre trades are not going to cut it. If you want to make it in trading, you can't take mediocre trades. You got to take light bulb. Light bulb, and you got to make sure that time and price have aligned. In this case, we needed to see this 15-minute CSD happen before we end up getting this trade here. And then we deliver to our target. So, learning every day, getting better, and yeah. I mean, it was a very, very systematic day. There wasn't, like, a ton complicated to it. Simply, we didn't get this trade until PM. And then, yeah, we ended up getting it then. But I think it's just one of those things that's like, in the morning, you just have to play defensive because you got Asia's highs above. And then finally, when you get this breaker for value gap, and you know you're in the wick of that 12-hour candle, light bulb, you know. So, and as well, we're within the wick of that daily candle probably. Let's check. Yeah, we were also within the wick of that daily candle as well. So it was like the perfect situation for a entry within that daily candle. So learned a lot today. I learned a lot about CRT and understanding higher time frame candles, understanding that if you get a daily CRT on that second or third candle where you know that price should deliver to the opposite side, enter within the wick of that candle. I mean, yeah. I think it might make more sense to do this as a daily CRT, because this 12-hour CRT, we end up, whatever. We sweep the high, but we end up sweeping the high again. But it is still a 12-hour CRT. We sweep that high again. Okay, we want to enter within the wick of this candle, and we deliver to the CRT low. So, valuable lessons learned today. Use high time frame candles to dictate where your entry should be. If you have a 12-hour CRT, enter within the wick of that second or third candle of the CRT, targeting the other side of that candle, and then boom. Yeah, I think that there's not much else to yesterday, besides this. I mean, yeah, I guess there was. Yeah, within this move lower, like at this point we know time and price have aligned, so the market's gonna move lower, and we end up going to this breaker and getting a reaction off of this. So like there were multiple chances to enter. We also had this breaker, but the market ended up wanting to go up to this fair value gap here.